Ayubowan everyone and good evening. Today we are going to start the seminar targeting the 2026 advanced level examination. I hope that I am audible to you all. Let me know, am I audible?
Yes, sir, we can hear you. We can hear.
Thank you. So we have given you a paper, which is the paper that we are going to discuss today, and I don't give you the time to write the formats because it has been given in advance. So I hope that you have attempted the paper. So without taking much time, I will be discussing the answer, right? So the first question is the company accounting question. You know that in the second paper, the compulsory question from the financial accounting comes from the company accounting. Number 2 is from the management accounting. So let's take up the first question, that is company accounting question. Now, when you read the question, particularly the introduction, the trial balance items without figures, like this, right? So what does it say? The summarized trial balance of Sanuja PLC as at 31st March 2026 is given below. You just read the items, right? Property, plant and equipment, the carrying amount, right of use asset carrying amount, accumulated depreciation, property, plant and equipment as at 1st April 2025, just read, right? Other income, inventories, sales, cost of sales, trade receivables, cash and cash equivalents, trade payables, distribution cost, administrative expenses, finance cost, lease liability, provision for employee compensation, bank loan, stated capital, ordinary shares, revaluation reserve, under that lands as at 31st March 2026, buildings as at 1st April 2025, provision for income tax at the beginning, income tax paid, interim dividends, retained earnings at the beginning. So those are the items given in the trial balance. Just to get an idea, just read it, right, without figures. So let's get into the adjustments. Before preparing the financial statements for the year, the following additional information should be taken into consideration. The first one, the inventory as at 31st March 2026 consists of the following items. So they have 3 items, A, B, C. The cost is given, the net realizable value of each item is given. It says the company's policy is to value the inventory using the item by item method. If you can remember, as per case 2, you can use either item by item method or batch by batch method, right, or group by group method. So their method is item by item method. However, the closing inventory has been recorded based on the total net realizable value. Total net realizable value. If you can remember the item by item method, you have to take cost and NRV, which is net realizable value, whichever is lower for each item, not the total net realizable value, right? You take the each item cost and NRV, whichever is lower. So it seems that their method is incorrect, right? So we have to correct that error. The total net realizable value, instead of applying the policy, corrected. So we have to correct it. So what we can do is we can just verify the thing that they have done. So what they have done, if you take the total of the NRV, let me write it here. Total of the NRV, A item 180, B item 130, C item 340. So total is 0, 11, 15, 3, 650. Just look at the trial balance and whether the closing inventory is at 650. Now this is the verifying the treatment, right? If you look at the trial balance lamai, you will see inventory is at 650. So we are sure that they have recorded the inventory at total net, not total net realizable value. That is incorrect, right? Now this has been debited, I mean the inventory account has been debited and cost of sales account has been credited, right? So let's calculate it correctly. There are three items A, B, C. So we have to take the lower. A item, the lower is NRV, which is 180. B item lower is 130, again NRV. C item lower is 300. So value of the inventory should be as per LKS 2 accounting standard, lower of each item, right? 0, 11, 611. But it has been recorded at 650. So it is 40 more than the corrected amount, right? 40 more than or 40 excess, right? So we have to remove that. So what is the entry? Inventory account credit 40, cost of sales debit 40. Because when calculating the cost of sales, they have deducted the closing inventory as 650. So the cost of sales is understated. To correct that, cost of sales debit, inventory credit. So we will adjust it. In the statement of financial position, the inventory under current asset should be 610, right? And then under cost of sales, the given cost of sales figure is 3420. 3420 plus 40, right? It should be 3460. I don't know whether other adjustments would impact on this, but let's assume there are no other adjustments impacting this, right? Therefore, the correct cost of sales is 3460. So what is the double entry? Inventory account credit 40, cost of sales debit 40. So the first adjustment is done. Number 2, the details of property, plant and equipment are as follows. Cost or value as at 31st March 2026, accumulated depreciation as at 1st April 2025, the depreciation rate. So we have these asset categories: lands, buildings, motor vehicles, office equipment. So 4 categories, right? If you look at the dates of balances, the asset value is given as at 31st March 2026. So don't take those balances as correct balances or opening balances, right? They may be incorrect. They are obviously not the beginning balances, plus there may be errors, right? So don't put those balances. But if you look at the accumulated depreciation line, that's at the beginning date. So we can take those balances. Let's take those balances. PPE note, the beginning balance of accumulated depreciation, buildings 3500. We know that lands are not depreciated because its useful life is unlimited, right? Therefore we don't depreciate the land. And then accumulated depreciation of motor vehicles 2900, that of office equipment 1100. Okay, so I don't put the asset balances, right? And then they say I don't show the question always, because you have been given the paper. So I hope that you have either a soft copy or a hard copy of the paper, right? All property, plant and equipment are used for the administrative purposes, right? Including motor vehicles, right? So motor vehicles can be used for administrative purposes, right? Depreciation for the current year has not yet been recorded. So that's obvious because the accumulated depreciations are given at the beginning date. The next adjustment, on 31st March 2026, company revalued land for the first time to 6 million, creating a revaluation surplus of 2 million, right? This revaluation has been correctly recorded. Now it has been correctly recorded. So the fair value of the land end of the period is 6 million. Therefore, this balance is 6 million. Right? So we can divide the lands and buildings as well. The balance given as 12,000, the combined value. Of that, this 6,000 is included. So if you remove 6,000, the buildings balance is 6,000 at the beginning. All right. And in that land revaluation transaction, 2 million surplus has been created. So it has been revalued to the first time. You know, first time revaluation surplus, we add to the asset 2 million, 2 million, and it has to be recorded or recognized in the other comprehensive income. Therefore, in the other comprehensive income, write land revaluation, say surplus 2 million, right? 2 million. And if you look at the trial balance, you will see this 2 million. But remember, that is not at the beginning date. That happened at the end of the period, right? So when you take the beginning balances to the statement of changes in equity, balance as at 1st April 25, if you look at the revaluation surplus or the reserve as per the trial balance, you can see land as at 31st March 2026, that happened at the end of the period. So it was not there at the beginning. Buildings as at 1st April 2025, that is coming from the previous year. So here the balance is 1,000. And if I put the other balances as well, the retained earnings at the beginning 1,100. Stated capital at the beginning should be at the beginning 10,000, right? 10,000. So please put the balances. Okay. So that land revaluation part has been done. And if you look at the other part of the adjustment, the buildings was revalued for the second time on 1st October 2025. So it happened at the beginning, at the middle of the year, right? 1st October 2025 means the middle of the year to 4 million. But this has not been recorded. That building revaluation has not been recorded. The first time revaluation of the building took place on 1st April 2025, beginning of the last year, creating a revaluation surplus of 1 million. So we can see that in the beginning balance, right? So that came from the last year. At 1st October 2025, the building's remaining useful life was estimated to be 16 years with the no residual value. So we have to record the revaluation. Now, if I come to the PPE note, the building's revaluation happened on 1st October 2025, middle of the year. So we have to depreciate the buildings for another 6 months based on the previous value. So previous value is 6 million. Depreciation rate for the building is 5%, you can see, right? So buildings depreciation, if you take the first half until 1st October 25, from 1st April 25, 6 million the previous value, that into 5%, that into 12 upon 6, right? So if you take 5% of 6,000, that is 300, half of that 150. Am I correct? I think the paper has been sent to you. I will ask the admin to send it once again to the chat box. All right. I think that it has been sent to a registered email, and also it is in the chat box. I can see. And if not, if you have the paper, if someone has the paper, just put it into the chat box, then others can get it. All right. So the total balance of lands and buildings 12,000. This includes the revalued amount of land 6,000. So the beginning balance of buildings is 6,000, right? So 6,000 into 5%, 300, half of that 150. Therefore, we have to remove 3,500 plus 150, the accumulated depreciation at the date of revaluation. So that is 3,650, and remove that from the asset as well, 3,650. And buildings have been revalued to the second time at 4,000. So the balance here should be 4,000. Then we can find the revaluation surplus or deficit, right? So if you go backward, 4,000 plus the minus thing can be added back, right? You know the way to get the balancing figure, right? So plus 3,650 minus 6,000, we get 1,650. 1,650. You check your answer. 6,000 plus 1,650 minus 3,650, it's 4,000. Yeah. So second time also a surplus. First time also a surplus. So there is no reversal. So that 1,650 can be recognized in OCI, right? So no reversal. So write it here. Buildings revaluation surplus 1,650. 1,650 under OCI. All right. And then the depreciation of buildings for the second half, right? So here we revalue the building at 4,000. After the revaluation, they say the remaining life is 16 years with no residual value. So no residual value, you can divide by 16. Then you can get the annual depreciation. So that is 4,000 divided by 16 is 250. But you have to take half of that, right? Because we depreciate for the remaining half. So half of that is 125. All right, 125. So total depreciation for the period is 150 plus 125, it's 275. 275. Okay, now record it. Add that to the current year depreciation and also put that under the administrative expense. So we can add it here because all PPE items are being used for the administrative purpose. So buildings depreciation should be 275. And in the PPE note, the depreciation for the period is 275. All right. So we have done that adjustment as well. The next one, on 1st April 2025, a motor vehicle with a cost of 4 million was sold for 4.5 million. The vehicle had originally been purchased on 1st April 2023. The cash received from the sale has been debited to the cash account, that's correct. Credited to the other income, that is incorrect. No other accounting entries relating to the disposal have been made. So we can record the disposal transaction. The motor vehicle value is 6,000, and also we can find the land's value, because including this 2 million, this is 6,000. So if you go backward, this should be 4,000, right? So we can record the disposal. The cost of the item being disposed is 4 million. So under disposal, deduct 4 million or 4,000. And then if you prepare a disposal account, let me prepare it here. Motor vehicle disposal account. Cost is 4 million, right? Came from the motor vehicle account. Accumulated depreciation. This had been purchased on 1st April 2023. Sold on 1st April 2025. Exactly after 2 years period, right? 24-25. So 4 million into depreciation rate of motor vehicles 15%. That into 2 years. 600 is 1,200. Check your answer. 4,000 into 15% into 2, yeah, 1,200. Right? So accumulated depreciation debit. So under disposals, here 1,200 should be removed. And then motor vehicle disposal account credit 1,200. Accumulated depreciation. Right? So it has been sold at 4,500. Cash has been debited, that is correct, but other income has been credited, that is incorrect. So we have to correct that. So from other income deduct 4,500. Other income, as per the trial balance, we can see other income 4,850. So from that 4,850 deduct 4,500. Therefore other income is just 350. Alright. And then disposal account credit, we got that from the other income. How much? 4,500. Alright. So if you balance this account, the credit side is higher than the debit side. 5,700. 5,700 minus 4,000, we get 1,700 profit, right? Profit or loss. So there is a profit of sale of the motor vehicle of 1,700. That should be taken to the other income. That's the correct figure. But write it as a separate figure, right? Profit on sale of motor vehicle 1,700. Alright. Then we can depreciate the motor vehicles. This disposal happened at the beginning. Alright. This 4,000 disposal happened at the beginning. Therefore, right from the beginning of the year, the motor vehicle balance is 2 million, right? So 2 million into depreciation rate of motor vehicle 15%, 2 million into 15%, 10% 200, 5% 100, 300, ne? Correct. 2 million into 15%, 300, yes. So here depreciation of motor vehicle 300. And then that has to be recorded in the administrative expenses, because they say all the PPE items are being used for the administrative purpose. Therefore, motor vehicle depreciation 300 should come here. And then if you look at the office equipment, there are no other adjustments for that. So we can depreciate it. Office equipment balance is 3,000. The depreciation rate is 10%. So that is 300. Current year depreciation. And under administrative expenses, write office equipment depreciation 300, right? So that part is completely done. Okay. All right, so we get into the third adjustment. I don't take much time, Lamai, because now you are at the latter moment, last moment, right? So you have like less than 1 month to the examination. So I don't take much time to discuss because I know that most of the things are uh, very easy to you, right? Because you have studied the subject. There is a question, why don't I or why didn't I record the stock write-off? Actually, there is no write-off. I mean, there is let me put in this way. Yes, you can take it as a write-off, yes. Yeah, you can take it as a write-off as per the A level, right? Because the cost has been taken to the, no, just cost is, how much is the cost? 200, 150, 300. It's 50, 650, right? So NRV total is 180, 130, 340, 0, 11, 5, 650. Yeah, so in that case, in this question, cost total of the cost and the total of the NRV is equal, right? Therefore, what you can do is you can take that into the other expenses. Shall I correct that adjustment? Now, anyway, the inventory has been recorded at 650 now. That is equal to the cost, right? In this case, therefore, when calculating cost of sales, they have taken 650. Therefore, 650 is correct. I mean, cost is also 650 now. Therefore, no adjustment is required for the cost of sales. All right. So let me correct it. That's a mistake. So remove this 40 from the cost of sales. Right. Because anyway, that recorded amount is equal to the cost. Therefore, no error in the cost of sales. So take that 40 into the other expenses. Stock write-off. Stock write-off 40. All right, stock write-off 40. Because, really that happened because total NRV is equal to total cost here. All right, so we were in the second adjustment. Now let's get into the third adjustment. On 1st April 2025, the company entered into a 5-year lease agreement to obtain a motor vehicle for the distribution purpose. So that is for the distribution purpose, right? The right of use asset and the lease liability, each amounting to rupees 5 million, have already been correctly recognized. Now, if you look at the trial balance, you can see the right of use motor vehicle and the lease liability. Both are recognized at 5 million or 5,000. So here 5 million, here also 5 million. They say it has been correctly recognized. So this is correct. So it is apparent that there is no down payment or initial payment because the asset value is equal to the liability value. If there is a down payment or initial payment, these two values may be or should be different. All right. So no down payment or initial payment. Therefore, the present value of future lease payments is 5,000. So that has been recorded to the asset account and lease liability account. All right. And then the next sentence says, according to the lease agreement, 5 equal annual installments of 1,600 each are payable. The first payment was made on 31st March 2026. That is correct. However, it has been recorded entirely as an administrative expense. So there is an error. So you know that when you pay the lease installment, that should be debited to the lease liability account. Therefore, lease liability account debit 1,600. Now that is included in the administrative expense. Remove it. 1,600 should be removed from this lease payment, right? Lease payment. And we took it from the admin expense. And then they say the no other lease related accounting entries have been made. The lease interest amounts to 900,000 for the year ending 31st March 2026, 774,000 for the next year, right? So current year lease interest is 900,000, lease liability credit 900, finance cost debit. Let me write it here. Lease interest 900. This is interest, right? Right of use asset. So let's complete the liability side. The total of the liability in the credit side 5,900. 5,900 minus 1,600, the carried down balance at the end of the period 003 4,300, right? So that's the brought forward balance 4,300. You have to divide that balance into two parts. One is current liability, the other one is, let me write it here, non-current liability. So what is current liability? Next year lease liability, right? The next year installment is 1,600. This includes next year interest 774. Therefore, next year capital component or the loan amount is 1,600 minus 774. It's 824. Sorry, 826. And the balancing figure is the non-current liability. So total liability is 4,300. From that deduct 826. So the balance is, if I take it here, 3,474. $3,474 and 826. Take these two balances to SOFP. Here under non-current asset, write lease liability $3,474. Under current liability, lease liability 826. Then they say at the end of the lease term, ownership of the motor vehicle will be transferred to the leasing company, the lessor, right? So the company doesn't get the ownership end of the period. Therefore, you know that if the company or the lessee doesn't get the ownership, you have to depreciate the right of use asset based on the lower of useful life and lease term. Lower of useful life and lease term. So they say the useful life is 10 years, whereas the lease term is 5 years. So the lower is lease term. So you can depreciate the right of use asset based on lease term, it is 5 years. So if you come to the right of use asset note, cost is 5,000, that is correct. Depreciation is 5,000 can be divided by no residual value. It's divided by 5, then that is 1000. Then the carrying amount of right of use asset is 4000, and they say this asset is being used for the distribution of goods. So that is a distribution cost. Right of use asset depreciation or motor vehicle depreciation 1000. Okay. The next adjustment, right. The fourth adjustment, the income tax paid during the year includes 280 relating to the previous year. So we will take it. If you look at the trial balance, income tax payment is 830. Tax paid is 830. They say this includes the payment for the last year and current year. Last year payment is 280. This one 280. Therefore, the balancing figure is for the current year. That is 0, 13 minus 8, 5, 7 minus 2, 5. The total income tax liability for the year ended 31st March 2026 means the current financial year has been estimated at 920. So here you see the total is 920. Therefore, another 0, 12 minus 5, 7, 8 minus 5, 3 is payable, right? This is payable. Am I correct? Yes. And if you look at the last year provision, income tax provision for the last year, 275. So provision is 275. And you know that the payment is the actual amount. So looking from that angle, this provision is not enough by 5. That is called as under provision. Alright, under provision. Therefore, total income tax estimation for the current reporting period is 920. Previously under provision 5. So we can prepare the income tax note number 3. 925. Right? 920 is the current year total estimation. 25, 26 total estimation. 24, 25 under provision is 5. We have to add that to the current year total provision. Therefore, total expense is 925. Right, 925. And then the current year payable balance is 370. That is a liability. Therefore, that should be taken to the SOFP under current liability tax provision. Is it 370? I might forget figures, right? Because I am taking those figures from the next screen. So when I take those figures, I might do mistakes, right? Is it 370? Yeah, correct. The next adjustment, fifth one. As at 1st April 2025, the issued ordinary share capital consisted of ordinary shares with a par value, meaning the price of rupees 25 each. On 31st March 2026, the company decided to make a right issue on one new share for every 4 shares held. 1 for 4, right? The issue price was 20 per share, and 80% of shareholders exercised their rights and purchased these shares. You know that at the right issue, shareholders have to pay the money. Even though it is less than the market value normally, they have to pay, right? So they have an option to pay, to purchase or not. So they say only 80% of shareholders have purchased the shares. So no accounting entries have been made. So we can calculate the value of the right issue. The stated capital at the beginning 10,000. Now this has been raised at 25 each. Then we can calculate the number of shares. Right? From that, they offer 1/4 of shares as right issue shares. Of that, 80% have been purchased. The share price is 20 each. So you can get the value of the right issue. 10,000 divided by 25 number of shares, it is 400. That is divided by 4, that is 100. Of that 80% is purchased, that is 80. 30 into 20, we get 1,600. Value is 1,600. Right? Now that has not been recorded. Both debit and credit entries are not recorded. So in the right issue, we get cash. Cash account debit, stated capital credit. Therefore, write share issue, add 1,600 here, and also add 1,600 to the cash. Cash balance as per the trial balance is cash and cash equivalents 1,420 plus 1,600 is it is 3,020, right? 3,020. 1,420 plus 1,600. All right. Number 6. The provision shown in the trial balance relates to a legal case filed against the company by an employee. If you look at the provision for provision for employee compensation, you can see 400 as per trial balance. Okay. But they say on 30th May 2025, the court ordered the company to pay 450,000 as compensation. Now they had provided 400, but the court has ordered the company to pay 450. 50 excess, right? 50 more than the provision. And just look at the court order date, 30th May. If you look at the last adjustment, the board of directors of the company approved the financial statement for the current year for issue on 15th July 2026. So that court order was given prior to the approval date. Okay, therefore this is an adjusting event as per case 10. Therefore another 50 to be provided. So write it as other expense employee compensation, right? Another 50 to be provided. Therefore provision is now 400 plus this 50, 450. Under current liabilities, provision for say compensation 450. Provision for compensation 450. All right. The last one, directors have proposed a final dividend of 60,000 for the year. So we know that proposed dividends or dividend declared are not recognized into the financial statements, but they are disclosed in notes. Therefore, the note number 8, write it, board of directors has proposed rupees 60,000 dividends to ordinary shareholders. All right, ordinary shareholders. Okay, we have done everything. Then we can take the other items from the trial balance. We will take it quickly. Property, plant and equipment we have taken. The right of use asset we have taken. Accumulated depreciation we have taken. Other income also taken. The inventory is taken. Sales 5,580. 5,580 sales. Cost of sales 3,420. No adjustment actually. 3,420. And then trade receivables no adjustment was there. Trade receivables 2200, and then cash and cash equivalents we have taken. Trade payables 1330, and distribution cost, take them. Distribution cost 1465, administrative expenses 3050, finance cost 940, lease liability we have taken, provision for employee compensation taken, bank loan, take it to the non-current liabilities, 1500. Stated capital we have taken, revaluation reserve we have taken, provision for income tax taken, income tax paid taken, interim dividends deducted from the retained earnings, that's 560. Dividend paid, right? And finally retained earnings taken. So we can take the balances. Total distribution cost is 2465. Admin expenses, let's get the total. 275 plus 600 minus 1600 plus 3050, it's 2325. Other expenses 90. Finance cost 1840. Okay, 2465 plus 2325 plus 90 plus 1840. So let me take those figures to the face of SOPL. Distribution cost 2465, admin expenses 2325, other expenses 90, finance cost 1840. If I take the total, it's 6720, right? And then the carrying amount of right of use asset is 4000, no other payables, no other receivables, 4000 carrying amount. And we can take the carrying amount of PPE, motor vehicles 2000, office equipment 3000. Let's take the accumulated depreciation ending balances. Here nothing. Here 3500 plus 275 minus 3650, it's 125. Then it will be the carrying amount here 6000, asset ending balance minus accumulated depreciation ending balance. So this minus this 3875. Here we get 2900 plus 300 minus 1200, it is exactly 2000. So the carrying amount is 0. See, 0, exactly 0. And here 1400, 1600. So if you take the total of the carrying amount, if I take the summation, 6000, 3875, 1600, it is 11475. And total of the other income 50, 0, 2050, right? 11,475. Then income tax 925. And then other income 2050. Gross profit is 5580 minus 3,420, that is 2,160, plus other income 2,050 minus expenses 6,720. We get a loss, right? 2,510 loss. Am I correct? Can anyone confirm? No, provision for compensation, please take it to the face of SOFP. Rather than putting that under a note, take that to the face. Am I correct? Can anyone confirm this one? Loss. Better if it is not a loss, right? Because you know that when I prepare this paper, I don't prepare the answer, right? So if it is a profit, that would be the ideal case, but a company can generate a loss, right? That is also possible. And on the other hand, even though you have a loss, there can be a tax expense, right? Because taxation law is different from the accounting regulations. So don't worry. Better if it is a profit, right? But you know, the fact that when I prepare the paper, I don't prepare the answer. Therefore, no, right of use asset, you can't take the residual value because that is the residual value applicable end of the useful life, right? We are not given the residual value end of the lease term. That's a two different thing, right? So don't worry, we will get the loss for the period 2,510 minus 925, it's 3,435 loss, plus other comprehensive income 3,650, then total comprehensive income 250. Take it here, total comprehensive income, loss for the period 3,435, 3,435 loss. Revaluation 3,650. Now you can take the closing balances. All right. So it is 11,600, here 4,650, here 1,100 minus 560 minus 3,435, it's 2,895 loss. That can happen, right? It's a loss-making company. So balances 11,600 plus 4,650 minus 2,895. So take them to the SOFP. Extended capital 11,600. Revaluation reserve 4,650. Here 2,895 loss. So summation is 13,355. Total non-current asset 15,475. Total current asset 38,5. Yeah. Therefore, total asset 5, 0, 13, 11, 2. Plus non-current liabilities 4,974. Current liabilities 1,330 plus 826 plus 370 plus 450, 2,976. Equity and total liabilities 4,974 plus this plus 13,355, it's 21,300. All right. And then you have to complete the note number 2. For that, you have to write the depreciation, then stock write-off, employee compensation, finance cost, right? Depreciation, it was 275 plus 300 plus 300. Then write-off use asset depreciation, we got, as I remember, 1000. And then we got employee compensation, altogether 450. And finance cost, it was, here also we took it 1840. And stock write-off 40. All right, I will show each page. I'll keep it for a while. The first one, second one, third one, fourth one. Okay, first one again, as requested. Okay, so let's get into the question number 2, part A. A manufacturing company plans to produce 90,000 units of a product each year. Each unit requires 2 kilogram of raw material. The following information is available for the raw material. Minimum daily consumption is 400 kilograms. Wait. Okay. Average daily consumption is 500 kg. Minimum lead time is 6 days. Maximum lead time is 8 days. The cost of ordering is 1 million, and the annual inventory holding cost per kilogram is 22.5. A simple question. Calculate the following economic order quantity: number of orders per year, pre-order level, maximum stock level, minimum stock level, average stock level. Question 2, part A. First one, economic order quantity. Economic order quantity is equal to 2BCO divided by CH square root, right? 2 multiplied by, they say they are planning to produce 90,000 units of the finished good. So 90,000 finished goods, 1 unit requires 2 kilograms of materials. So 90,000 multiplied by 2. The annual demand of material is 180,000. Cost per order is 1,000. Holding cost of a unit of material for a year is 22.5. So you take the economic order quantity. 2 multiplied by 180,000 multiplied by 1,000 divided by 22.5. So it is 16 million. If you take the square root, it is 4,000 kgs. Then number of orders per year. Number of orders is calculated as annual demand divided by order quantity, right? D divided by Q. Annual demand is 180,000. At a time we order 4,000. So the answer is 180 divided by 4, it's 45 times. Number 3, reorder level is equal to maximum consumption into maximum lead time. They say maximum consumption is not given, but the average consumption is given. Based on that we can find it, right? Average consumption is 500. You can multiply that by 2, then that is 1000. Minus minimum consumption is 400, then maximum is 600. And the lead time is given, the maximum figure, that is 8 days. Therefore reorder level is 4,800 kilograms. Fourth one, maximum stock level. Maximum stock level is calculated as reorder level minus minimum consumption multiplied by minimum lead time. It's right like time plus reorder quantity. Reorder level is 4,800 minus minimum lead time is, minimum consumption is given as 400 kgs. Minimum lead time is 6 days plus order quantity is 4,000. So maximum stock level is 2,400, means 2,400. If I am not mistaken, 6,400. Fifth one, minimum stock level, reorder level minus average consumption into average lead time. Reorder level 4,800 minus average consumption is given as 500. Average lead time, minimum 6 days, maximum 8 days. Get the summation, divide by 2. Here 14 divided by 2, 7. It's 3,500, therefore 1,300. And then sixth one, average stock level. One formula is minimum stock level plus maximum stock level divided by 2. Right? Minimum stock level is 1,300. Maximum stock level is 6,400. Take the summation, divide by 2. $1,300 plus 6,400 divided by 2, it's 3,850. And this is also correct, right? The second one is, let me write it here. The same, right? Minimum stock level 1300 plus reorder quantity 4000 divided by 2. Here 2000, 3300. That is also correct, right? You saw the smartboard screen, ne? Sorry. Part B. All right. Gayan PLC has one factory consisting of two production cost centers, namely assembly and finishing, and one service cost center, stores. The company manufactures a product called X. The estimated overhead cost for the coming accounting year are as follows. Indirect materials, assembly department, finishing department, indirect labor, assembly, finishing, stores, factory rent, store rent, factory electricity, store electricity, machine depreciation, insurance expense, employee welfare, including store staff. Additional information: value of machinery, kilowatt hours, number of security guards, number of employees excluding security guards, right? Quantity of materials used, floor area square meters, machine hours, direct labor hours. The assembly department absorbs overheads based on direct labor hours. Finishing department absorbs overhead based on machine hours. Following direct costs are incurred for 1 unit of product X. Direct material 450, direct labor 300, other direct cost 80. The following production information relates to product X. Machine hours required in the assembly department, direct labor hours required for the finishing department, production units, non-manufacturing overheads. The selling price of product X is determined by adding 20% profit margin on total cost. Margin on total cost. Right, margin on total cost. Right, the answer. So we have to have the overhead analysis sheet. Part B, overhead analysis sheet. The cost item, the allocation basis, cost to production departments, the service department. Cost item, allocation basis, cost, production cost centers. There are two, assembly and finishing, and then one service center, store. We have been given the indirect materials, assembly 420, finishing 880, and nothing for stores. So total is 1300, right? So we are given the figures for each department, so therefore direct allocation. Then indirect labor, again we are given directly, assembly 720, finishing 440, and stores 200. So altogether 1360, right? 1100, 1360. And then we can take the rent, factory rent, and also we are given the store rent, stores rent, right? So that is direct. We can take that to the stores, that is 60. Therefore, this factory rent should be apportioned to assembly and finishing, right? Because on top of the question it says one factory consisting two production cost centers. And one service cost center stores. So it's not that clear whether this store is in the factory. But as we are given the, let's see whether we are getting the numbers correctly. It's not that sure that this factory rent is relating to the assembly finishing only or assembly finishing stores all three. Now as the store rent is separately given, let's assume initially, if not we will change, this factory rent is applicable only for the assembly and finishing, right? So based on the floor area, let's apportion it. Factory rent is 270. Let's try it, right? And if you divide that by 150, it's 1.8. 270 divided by altogether 190. You don't get the number, right? So you have to divide that by 150. So 270, I think I'm getting the correct figure, right? 270 divided by 150, it's 1.8 per square meter. That into square meters of assembly department, 50, then it is 90, and then 1.8 into 100, 180, right? So altogether 270. Similarly, the electricity, factory electricity should be apportioned based on the kilowatt hours. That's 600, and then they say electricity of the store electricity, that is direct, 70, that should be taken to the store. So here 600 divided by kilowatts of assembly and finishing 400, then it is 1.5, right? 1.5 into 240, it's 360, and 1.5 into 160, it's 240, right? Here nothing. And then machine depreciations should be based on the value of machines. Depreciation is 400. 400 is divided by value of machinery, say 2 million, or you can take 2000 or 20 even, right? 400 divided by 2 million, we get a decimal point, but you know the apportionment, right? 0.0002, that into 800,000, 160. The remaining one is it 240? Nothing here. And then insurance expense. They don't say that is insurance expense of employee, something like that. So we have to assume the insurance expense of the factory. So we have to take the floor area, right? Insurance expenses 450. Floor area total is 50, 150, 190. Wait for a while. You don't get a whole number, right? Keep it for a while, because I am thinking of whether we have missed one word when typing the paper, right? So insurance expense, if you assume that is factory insurance, the appropriate allocation base would be floor area, but if you take floor area, it doesn't generate a whole number. So shall I make it specific? You can say machine depreciation, or else you can say insurance expense of the, shall we keep it for a while? Keep it. Next, take the employee welfare. They say including store staff. So that implies that this insurance is for the factory, right? I think that should be the thing that I have written when I write the paper, but I am not sure whether they have missed one word in typing, right? So this implies like welfare relates to the whole staff, right? So this might be for the factory. We will make it, right? We will correct it. Welfare, the number of employees. The base is, the cost is 300. If you take the number of employees, Lama, you have to take all employees, right? Including security guards, because we have to provide welfare service to the security guards as well, no? Right? They are also employees, no? Therefore, take the total. So total is take the total 10 plus 8 plus 12 plus 65 plus 42 plus 13. So I am getting 150, right? All employees, right? Including security guards, right? We have to provide the welfare for them as well. They are also humans, right? Therefore, that into 2, I mean 2 per employee, 2 into 75, take the total, 2 into 75, 150, 2 into 50, 100, 2 into 25, 50. and this is the problem, right? So let me take it as shall I take it as security expenses? Insurance, I might not, I'm not that sure because I don't have the handwritten paper, right? Okay, let me change it as security expenses. Then based on the security guards, we can, apportion, right? So let me change this as security expense. Security. Then the basis is a number of security guards. Number of security guards. So number of security guards total is 10, 8, 12, 30. Then per security is 15, right? For 50 divided by 30, 15, right? 15 into 10, 150. 15 into 8, 120. 15 into 12, 180. Am I correct? 300, 450. Yeah. Now we can take the total of each column. We will see, right? I'm not that sure about this one, right? 200, 60, 70, 180, 50. 560. Wait for a while. Wait for a while. Yes. Can you do another change? Because otherwise you get fractions, right? Decimals. I'm not sure about this figure. Can you make this change as well? In the paper, can you make this indirect labor cost into 190? Right? Instead of 200, can you make it as 190? Then this will be 1350, right? Please make it 190 plus 60 plus 70 plus 180 plus 50. It's then 550. All right. Then other totals 1300, 1350, 270, 60, 600, 70, say 850, 300. I get 4800. And here 420 plus 720 plus, let's take 450, then 310, then 150, 2050. And here 880, 440, 180, say 480, 220, 2200. Take the totals. All right. Then we can do the reapportionment. Reapportionment. Store department's overhead is 550, deduct it and write it here stores. The reapportionment basis is quantity of materials used, because this is a store, right? So it issues materials to the production departments. So materials used. So 550 can be divided by materials used. So you can see 55,000, right? So 550 divided by 55,000, you get 0.01. That multiplied by 35,000, you get 350 here. That multiplied by 20,000, you get 200 here. Nothing. So the totals here 4,800, here 2,400, here also 2,400, here 0. All right. Then we can calculate the overhead absorption rate of each production department. Right. Okay. Now there was an issue in the question because that insurance, we don't know whether it is relating to the employees or whether it is relating to the building or the factory. So that ambiguity was there, right? So anyway, we got it done. So we can calculate the overhead absorption rate. Overhead absorption rate, assembly department and finishing department. Both departments have the budgeted overhead cost of 2,400. The absorption basis of assembly direct labor hours. So you can divide this by total direct labor hours, budgeted total direct labor hours of assembly department, that is given 4,000. And here the absorption basis is machine hours, budgeted total machine hours of finishing department 6,000. Now correct, right? So it is here the absorption rate is 600. Yeah, 0.6 means 600. Here you get 400, right? Per direct labor hour per machine hour. And then the next one, they want us to calculate production cost per unit of product X. So they say part 3, direct material cost is 450, direct labor cost is 300, direct other cost is 80. If you want, you can take the prime cost, but they are not asking the prime cost. And then manufacturing overheads. So 2 production departments, assembly and finishing. Absorption rates are 600 per direct labor hour, 400 per machine hour. They say on the other side, machine hours required for the 1 unit of product X in assembly department 4. Is it given? Should be changed, ne? It should be lamai direct labor hours. Should be the wording should be changed. Wait. List 2. Sorry. These 2 wording should be changed, right? This should come here, this should come here. Make it. Direct labor hours required in the assembly department, and then machine hours required in the finishing department. All right. So based on that, change direct labor hours required in the assembly department 4, then 2400. Machine hours required in the finishing department 5, that is 2000. The production cost can be calculated. How much? 450 plus 350, sorry, 450 plus 300 plus 80 plus 2400 plus 2000, 5230 production or manufacturing cost per unit, right? Production cost per unit. Then the selling price, 4th requirement, production cost is 5230. They say the selling price is determined by adding 20% on profit margin on total cost, right? Profit margin on total cost. Now Lamai, if you are given this word that is actually incorrect, it should be profit markup. So make it as markup or cut this off. You know, margin is, this is also okay. Just, you know, undo. But there is a wording missing, right? Word missing. Don't cut it off. How do I undo? Right. So profit margin determined based on the total cost. Or you cut this off, total cost. Just cut this off. Just keep profit margin, 20% profit margin. This is also okay, but one word is missing, right? Right. So Lamai, this is production cost. So we have to add the non-manufacturing overheads. Right? They say non-manufacturing overhead total 200,000. That is for the 4,000 units. So 1 unit requires 50, right? 200 divided by 4, 50. Therefore, full cost or total cost per unit 5280. Okay, non-manufacturing overhead is 200,000, that is for 4,000 units. So 200,000 divided by 4,000, you get 50 per unit, right? So full cost or the total cost per unit is 5280. So when you determine the selling price, you know selling price is always equal to the cost plus profit, right? They say selling price is determined or the profit is determined based on the selling price because margin is given, right? They say 20% margin. Margin is determining the profit based on selling price. So selling price is 100. If so, profit is 20. So the full cost, this is full cost, right? That's they wanted to emphasize, right? That's why that 20% margin on cost is given, right? So this is full cost. So full cost is 80. So we can find the selling price quickly or easily. Selling price is equal to 5280 is equal to this full cost of 80. If so, how much is the selling price? 100. Therefore, selling price per unit is 5280 divided by 80 multiplied by 100, we get 6600. That is the answer. Okay. And then final part, if 500 units of product X are sold, calculate the sales revenue and gross profit. So let me write the answer for that part here. This is fourth part and fifth part. Shall I write it here? Fifth part, sales 500 quantity at the selling price is 6600. So sales is 500 multiplied by 6600. I am getting 3.3 million, right? Less cost of sales, cost of goods sold. So they are asking the gross profit, right? So deduct only the manufacturing cost because manufacturing cost becomes the cost of sales when you sell. Therefore, 500 quantity multiplied by manufacturing cost per unit is 5230, right? Not the full cost they ask, not the net profit they are asking, right? They are asking the gross profit. Therefore, 500 into 5230, it's 2,615,000. Therefore, gross profit is 3.3 million minus this 685,000. That's the answer. And if they are asking the net profit, you take the full cost, right? That is 5280. They are asking the gross profit, then you take the manufacturing cost. That's the difference. So there is one question posted in the chat box. Reorder quantity and economic order quantity are both the same? Not necessarily, right? An organization can order the reorder quantity or anything else, right? Assume the reorder quantity is 500, it can be the economic order quantity or not. So these two are not necessarily be the same, right? One can order the reorder quantity deciding the economic order quantity. One can order a different quantity that is different from the economic order quantity. All right. The question number 3. The following asset and liabilities belong to Malaysia Traders as at 1st March 2026. All business transactions are carried out through a bank current account. Property, plant and equipment cost carrying amount. And then okay, I will show the overhead analysis sheet once again. This one. Okay, let me put it in this way. Okay, so I will read the question. Inventory, trade receivables, cash, bank loan, trade payables, accrued electricity expense. Transaction for the month of March 2026. So what's the requirement? Record all of the above transactions up to 31st March, including the transactions appearing only in the bank statement using the following accounting equation. Right? So we can write the equation. Question number 3. Property, plant and equipment plus inventory plus trade receivables plus cash equals capital plus retained earnings plus bank loan plus trade payables plus other payables. Right, can't I duplicate the this? All right, if needed I will write once again. Okay, so we can write the beginning balances. Property, plant and equipment, the carrying amount is 2,400. Brought forward balances. Inventory 420. Trade receivables 160. Cash 195. Capital we have to find. And also retained earnings is not given. Keep it. Then bank loan 600. Trade payables 220. Other payables 222. Aren't we given the capital or retained earnings balance? Isn't it given? Okay, shall I give it? That should have been given, right? One balance at least. So if I take the total of the equity, 2,400 asset value, let me give you the value, right? 420, 160, 195 minus 600 minus 220 minus 22. Can you write like retained earnings in that beginning balances, this one? Another item, can you write retained earnings? Let's take 1,333,000. Retained earnings 1,333,000. That should have been given, right? Either balance should have been given. I had missed it. Okay, take it. It's let me change it, right? 1,333,000. Right? All right. Right. So it is 1,333,000. Therefore, capital can be taken as the balancing figure. So altogether it was, Lamai, I will give you the figure, right? As we have taken much time. So altogether 2,333 minus 1,333, you can take the balancing figure, right? 1,000. Right? So summation is called as the equity, capital plus retained earnings. So let's record the transactions quickly. 1st of March, office equipment costing 600,000 was introduced to the business by Malaysia. PPE increased by 600, capital increased by 600. Then 3rd of March, credit sales amounting to 180, trade receivables increased by 180. So you have to find the cost, right? Cost should be deducted from the inventory. So if you look at the additional information, they say the business sells all inventory by adding 20% profit mark. They actually profit, please cut this margin word, right? There are some corrections to be done, right? In the paper, they cut the margin word. It should be markup actually. Markup. Should be markup, eh? Should be markup. All right. Right. Make these corrections. So we have to find the cost, right? So how to find? 180 is the, always selling price is equal to cost plus profit. So if the markup is given, we determine the profit based on the cost. Other way around. Therefore, cost is 100, profit is 20. Therefore, selling price is 120. Right? Therefore, we can find the cost of that sales 180. Cost can be found. Sales value is 180. That is equal to this 120 multiplied by 100. 180 divided by 120 multiplied by 100, it is 150, right? Got it? Now this is equal to 120. We have to find the cost, multiply by 100. That's 150. Therefore, deduct 150 from inventory. And there is a profit of 30 that should be added to the retained earnings, right? Because we have the retained earnings column. The next one, next transaction, 4th of March. Inventory costing 120 was purchased from Aruna Traders on credit by making a cash payment of 80. So inventory should be increased by 120. We have paid 80. Cash decreased by 80. And remaining 40 should be added to the trade payables. Then 6th of March. The cost of the goods sold for cash sales 100. That this time cost of sales is given. Therefore, inventory reduced by 100, and we keep 20% markup on cost. Therefore, if the cost is 100, profit is 20, should be added to the retained earnings. Sales price is therefore 120. That is a cash sale. Therefore, cash will be increased by 120. 8th of March. Goods sold on 3rd March 2026. This one, they are referring to this one. With a selling price of 10,000 were returned by the customer. Therefore, here sales price is 180. Is it not? That is also not a whole number, right? What shall we do? Shall we, as there are few errors, corrections, shall we make it as does it impact on the bank reconciliation? That number is okay, but you don't get the whole number, right? So selling price is given. Shall we write it as 18,000? This one 18,000. Okay, then you don't get a whole number, right? Okay, make it as 18,000. So trade receivables should be decreased by 18 because it is a return inward, and based on that you can find the cost, right? So that is 10% of this, right? See the relationship, 180, 80. So 10% of this. Therefore, cost is 15. So inventory should be added back by 15. So there is a loss of 3. Retained earnings decreased by 3. So make it as 18, right? So I made this as 18, right? Got it. All right. And then 10th of March, the amounts payable to Aruna traders were settled after receiving 10% cash discount. Now, the amount payable to Aruna is 180 minus 18. Because if you look at third transaction, 3rd of March, no, it's 4th of March, right? Inventory costing 120 was purchased by paying 80. This one, right? But the payable balance is 40. So that is settled at 10% cash discount. So deduct 40 from here. And we have got 10% cash discount, that is discount received. 4 should be added to the retained earnings. Therefore, we are paying 36. Deduct cash by 36. Then 13th of March, cash was received from the trade receivables outstanding as at 1st March 2026 after allowing the 5,000 discount. Simple. So receivable at the beginning 160. It has been settled. 160 should be deducted from here. The discount given is 5. That's an expense. Therefore, deduct 5 from the retained earnings. So how much we get? 160 minus 5, 155. Cash increased by 155. Then 14th of March, a debt of 10,000 which had previously been written off as bad debt was received. Previously written off bad debts has been received in the current month. So simply what we can do is we can take it as an other income. So cash increased by 10, as it is an other income, retained earnings increased by 10. 17th of March, electricity expense of 30,000 was paid, right? So cash decreased by 30. As at 31st March 2026, additional 5,500 remained outstanding, right? So you can see 30 has been paid for the electricity, but at the beginning you saw a 22 accrued electricity balance. So when you pay 30, what does the electricity board do? The previous outstanding will be set off first, right? Therefore, this should be deducted 22, right? So if you calculate it, 30 paid, but that was settled for the previous outstanding 22. Therefore, 80 is paid for the current month, right? And they say another 5,500 remain outstanding. So 8 paid for the current month, another 5.5 is payable. Therefore, total expense is 13.5. Retained earnings decreased by 13.5. And this 5,500 is outstanding. Therefore, add 5.5 here. Then 20th of March, a bank loan installment of 35 was paid. Cash decreased by 35. And by the time you pay the installment, you don't know the interest. Okay? Therefore, you deduct 35 from the loan. Assume that by the time you pay the installment, you don't know the interest component of that loan, right? So I deducted the total installment value 35 from the loan. And then 24th of March, Malaysia withdrew inventory worth 15,000 and cash of 18,000 for the personal use. So inventory reduced by 15, cash reduced by 18. Altogether, 33 should be decreased from the retained earnings, right? Because normally the owner takes out a part of the profit, right? That is provisions, part of the profit. And then 27th of March, interest income of 22 was received. Cash increased by 22, retained earnings increased by 22. 31st March, equipment with cost 200,000 and carrying amount of 160 was sold, resulting in an accounting profit of 30. So carrying amount of the item being sold is 160, should be deducted from the PPE. The accounting profit is 30, so that should be added to the retained earnings. And the sales value is therefore 160 plus 30 profit, 190. That should be added to the cash. Alright. Then the additional information, the business sells all inventory by adding 20% profit. Markup should be markup on cost that has been taken. The property, plant and equipment are depreciated using the straight line method at 12% per annum on cost. Okay, shall we calculate the depreciation? If you write a timeline, it's a month, right? 1st March, 31st March. Cost at the beginning of the month is 3,000. And if you look at the first transaction, very first transaction, office equipment cost is 600 was purchased. On this date, 600 was purchased. And if you look at the last transaction, 31st March, they have sold 200. But it was their entire month, right? It was there in the entire month. Therefore, we can depreciate 3,600. Annual depreciation rate is 12%. But we are recording this transaction for a month of March. Therefore, 12 upon 1. So the depreciation is 36. The monthly depreciation is 36. Okay, 36. So 36 should be, shall I use the same screen, Lama? Because otherwise I have to write it once again, right? It will take much time. Therefore, shall I use a different color to demarcate it? Depreciation 36 should be deducted from the PPE, and from retained earnings 36 should be deducted. And the next adjustment is bank loan installment paid includes 20,000 interest, right? That is an expense. So retained earnings should be decreased by 20. Now that has been deducted from the loan, including interest. Therefore, you have to add it back to the loan balance. Add that back to the loan balance. That is equal to that lease liability. See, beginning liability, interest is added, payment of the installment deducted. Beginning balance of the lease, right? Interest is credited, meaning adding. Payment of installment debited, meaning deducted, right? Same thing applies here. All right, so this is the answer. But they say that including the relevant items in the bank statement, right? So I think we have to have another format. Shall I have it once anyway? Can't help. PPE plus inventory plus trade receivables plus cash equal capital plus retained earnings plus bank loan plus trade payables plus other payables. Okay, and also we will prepare the bank reconciliation statement as well. Then it will be easy. And also second part is asking the profit. Therefore, keeping some space here. The second part is profit. You know how to get the profit from the retained earnings. Ending retained earnings minus beginning retained earnings plus drawings. That's the profit equation. At the same time, shall I prepare the bank reconciliation? Third one, bank reconciliation. Adjusted cash balance, then plus unpresented checks, minus unrealized checks, then you get the bank statement balance. Have these formats. Okay. All right. So let me read the other information as well. The cash balance as at 28th February 2026, the last month ending balance, agreed with the balance of the bank current account on that date, meaning the beginning balance is agreed, right? However, the cash balance as at 31st March 2026 did not agree with the balance in the bank statement. The ending balance is different. The following items cause the difference between the cash balance and the bank statement balance as at 31st March 2026. Checks issued but not yet presented for the payment 35,000. Unpresented checks 35. That doesn't impact on the equation, right? Checks deposited but not yet credited means not yet realized to the bank 22,000 unrealized checks. That is also not relevant to the equation, right? The check received on 13th March 2026. Can we find it? 13th March, this one. The check received is how much? 155, right? 155. They are saying about that was dishonored by the bank. Accordingly, the discount previously allowed to the debtor should also be cancelled. This one should be cancelled. Okay. So they want us to record that as well. Therefore, when you cancel it, debtor will be increased by 160. The reversal of this, right? Reversal of this. So trade receivables increase by 160. Cash will decrease by 155. Retained earnings increase by 5. The reversal of this, right? Then an insurance premium of 45,000 had been paid by the bank under a standing order. So cash decreased by 45 and retained earnings decreased by 45. The bank charges 2,000, cash decreased by 2, retained earnings decreased by 2, right? I'm not taking the other balances, but you have to take, right? At the examination, you have to take balance of each column. But because of the time limitation, I'm not taking the balances of each column, right? I'm taking two balances only, cash and retained earnings, because cash balance is required for this one and retained earnings balance is required for this one. All right. So let's take the balances of these two columns only for the time being. Cash balance 195 minus 80 plus 120 minus 36 plus 155 plus 10 minus 30 minus 35 minus 18 plus 22 plus 190 minus 155 minus, let's take 47. If I am not mistaken, the balance here is 291, right? That's the adjusted balance, right? Because all the adjustments have been done here. Therefore, the balance here is 291. And similarly, we can take the total of retained earnings, the beginning balance 1333, and let's take 50 minus 3 plus 4 minus 5 plus 10 plus 13.5 minus 33 plus, let's take 52 minus 56 and plus 5 minus 45 minus 2. I get 1323.5 if I am not mistaken, right? So we can finish this off quickly. The ending retained earnings balance is 1323.5. The beginning retained earnings balance is 1333, and the drawings were 33, right? 33. Therefore, the profit for the period or the month is 1323.5 minus 1333 plus 33, it's 23.5. And completing the reconciliation, we have to add 35, we have to deduct 22. So in net, we can add 14. Therefore, 5 0 3 305. All right. Okay, the next part. Right. Part B. The following information was extracted from the books of a sport club as at 1st April 2025. The club is a non-for-profit organization. The balance as at 1st April 2025, property, plant and equipment, subscription receivable, 1 year subscription outstanding, subscription received in advance, cash, accumulated fund, life membership fund. Just look at whether asset, liability, equity are in the balance. Total asset is 1215. Just look at the 1280, right? $1,280. I think there is a mistake here also, because it should be agreed, right? Total asset is 1280, right? Minus accumulated fund 90 and life membership fee 270. 920 is missing, right? Subscription received in advance, nothing. Okay, shall we make it as like Lamai, the accumulated fund is incorrect, this one. Can you write it as 1200, wait, 80 minus 270, write 1010, 1010. All right. Okay. So then, as at 1st April 2025, club had 50 ordinary members or normal members and 10 life members. Annual subscription payable by each member is 3,000. The club introduced the life membership fee on 1st April 2024 last year, and its policy to recognize it over 10 years. Subscription received during the year for last year, current year, next year. One member whose subscription was outstanding at the beginning resigned from the club on 1st April 2025, and the committee decided to write off the amount due from that member. 31st March 2026, the club received a donation of 300,000 to purchase sport equipment. On the same day, sport equipment costing 280 was purchased by using 80,000 from the club's cash balance together with the donation received. No accounting entries have been made regarding this transaction. The club's policy is to recognize the donation as income in proportion to the depreciation charge on the donated asset. Actually, it should be here also there is a mistake. Donation as income to the extent of use. To the extent of its use. To the extent of its use. All right. Okay, so they are asking the subscription account, income and expenditure account, and SOFP as well. Okay, shall we do it quickly? Part B. So we need to have the subscription account, beginning receivable balance, ending receivable balance, beginning received in advance balance, ending received in advance balance, receipt and payment account, income and expenditure account. As well as we want the life membership fee account. There is a beginning balance, receipt and payment, income and expenditure, carried down balance. And we want, as it requires the SOFP, we want the receipt and payment account as well. And finally, we want a sport fund account, right? Sport equipment fund account. Sport equipment fund account. And then you can prepare an statement of financial position. SOFP, non-current asset, current asset, equity, under that accumulated fund, beginning balance, surplus of the period. Number 2, other funds. Under that we have life membership fee fund and sport equipment fund. And then I don't see non-current liabilities and current liabilities. Okay, we'll start. We can write the beginning balances. Property, plant and equipment 1200. Let's write it here 1200. And subscription receivable at the beginning 15,000. Subscription received in advance, no balance. Cash 65. Receipt and payment. And then accumulated fund, the beginning balance of the accumulated fund is 1010. It should be 1010. And the life membership fee beginning balance is 270. So I have taken the beginning balances, right? They say as at 1st April 25, there were 50 normal members and 10 life members, right? The annual subscription is 3,000, but they say look at the third point, one member whose subscription was outstanding as at 1st April 2025, third point, right? Sorry, not third one, fifth one. One member whose subscription was outstanding as at 1st April 2025 resigned from the club on 1st April 2025. So from this date, he is not there. So from the beginning of the year, there were 49 members, right? No additions. Therefore, we can find the income. 49 into 3, 3,000 per member. So that is 49 into 3, 147. We want an income statement as well. Is this part enough? Income statement. Under income, subscription income, normal subscription, normal members or normal subscriptions, 147, right? Income statement, right? Income is 147. I'm doing it fast. And then they say this member has an outstanding amount of 1 year payment. It was decided to write it off, right? So at the beginning balance, you can see 1 year subscription outstanding. So that is 3. So it should be written off. Write off 3, right? That's an expense. Here under expenses, write-off 3. Similar to the bad debt write-off, right? And then life membership fee was introduced on 1st April 2024. Now it is 1 year gone, and the company's or the entity's policy is to recognize it over 10 years. So this is equal to 9 years, right? Because it has been given on 1st April 2024. So after taking 1 year balance into the income, this is the remaining balance. Therefore, this should be divided by 9. Therefore, the income part is 270 divided by 9, 30. Right, 30. That should go to the income statement. Subscription, life membership fees, 30. I'm doing it fast. Alright. And divide by the remaining life, because this is remaining balance. Therefore, this year no new life members, therefore credit side 270. Of that we recognize 30 into the income, therefore closing balance is 240. Right, 240. That should come to the SOFP, other funds, life membership 240. And subscription received during the year, take the total 12, 120, 12, is it 24, 144? 144, receipt and payment account debit 144, subscriptions. And if you analyze this 144, the total, I have taken the total, right? I think that I am okay, I am correct. And if you analyze the 144, 12 from the previous year, therefore another 3000 is receivable that has been written off, right? 12 from the previous year, 3000 receivable further, that was written off. And if you look at the next year, 12, that is ending received in advance, 12. That's a current liability. So under current liabilities, subscription received in advance, 12. Right? Subscription received in advance, 12 under current liabilities. Then ending receivable, you can find the debit side total is 12, 14, 6, 7, 174 minus 174, right? 15 plus 147 plus 12, 147 minus 144 minus 327. That's the ending receivable. That's a current asset. Therefore, take it as current asset, subscription receivable 27. Right? That is done. Then one before the last, they have received a donation of 300,000. Cash account debit, this is cash, right? Debit 300, sport equipment fund account credit 300, receipt and payment. And then they had purchased sport equipment costing 280. So PPE should be added by 280, the value of the PPE, right? But for that, they have used 80 from the club cash. So anyway, 280 has been paid. Therefore, receipt and payment account credit 280, because including this one, right? Part of the sport equipment fund, part of the club's cash. Anyway, they have to pay 280, right? Sport equipment account. Now this is fund account, right? Receipt and payment account debit 300, sport equipment fund account credit 300. Now they have purchased 280, right? If you look at the composition of the 280, 80 from the club cash, and then remaining 200 is from the fund, right? 280, but 80 was paid from the club's cash, and remaining 200 for the from the fund. Therefore, to the extent of the usage of the fund, we have recognized the income. Therefore, 200 should be transferred to the income and expenditure account, right? 200, that's the usage. Therefore, in the income statement, sport equipment donation 200 should come here. The remaining balance of the fund is 100, right? 300 was there, 200 was recognized as income, so the remaining balance is 100. That should come here. Sport equipment fund. Last one, operating expense of 42 was paid. Therefore, cash credit expenses 42, but 6,000 is remaining outstanding. Therefore, total expense is 42 paid, 6,000 payable, altogether 48. That 6,000 is payable, therefore current liability expense payable. Expense payable 6. That's it. Right, so we can take the balances. Subscription account done, life membership done. We can take the cash balance. Seems debit side is higher than the credit side. 65 plus 144 plus 300, I get 509 minus 280 minus 42, I am getting 187 carried down, and this has 100 balance, it has been taken to the SOFP. Life membership balance has been taken, cash balance 187. Okay, so under current asset, right, cash balance 187. PPE 1480, total current asset 14 11 2, if I am not mistaken, 94 6 1. Surplus, we can calculate total income 77 300, total expenses 51. Surplus is 6 2 3. Surplus is 326. So total accumulated fund end of the period 1336. Other funds 340. Non-current liabilities no balance, here 18. Therefore, equity and total liabilities 1330 plus 340 plus 18, I get 1694. Exactly it balances, right? So it's a very good question. I will show you the previous page as well. All right. Right, Lamai. So actually, I am not going to do the other three questions because of the time limitation. So now it is 9:30 almost. So what you can do is you can attempt these three questions on your own, and you can get the support from your, lecturer. Because Lamai, uh, actually I'm in a very busy schedule, so it's very difficult to find time, but I did this with the request of CS Sri Lanka. I hope that you understood the three questions, and you have to answer another two questions for the examination. Out of 6 you have to select 5. So what you can do is you can attempt the remaining three questions, and if time permits, we can meet once again. So I'm not going to do the remaining three questions, right? Okay. So Lamai, let me wish you all the best for the upcoming examination. Do your level best, and my advice is always learn the theory well. Right? If you know the theory well, and if you have some level of practice, you can answer for any question raised. Right? So try to understand the theory well and do some practical questions, and then you get the expertise and do the past papers. Finally, you do the past papers, right? For example, if you take up this question, the entire lesson will be covered, right? This one, you have the subscription, life membership fee, and then the special donations. So most of the things are covered. So I hope that you will be able to get into the universities, right, for higher studies. Don't compromise your education because of anything, and you invest another 4 to 5 years for your higher education, and the results will come later, right? So don't rush to earn money. You invest your money, effort, and the energy for another 4 to 5 years, right? So that's my advice. Because you will be living like another 50-40 years, but if you invest 4 years for the higher education, then you can get a good result. All right. And also try to get some other qualifications like the computerized accounting knowledge, and IT knowledge and things like that, right? All right, so that's what I wanted to tell you. As I told you earlier, I'm in a very busy schedule, Lamai, so I can't give, I can't spend more time, right? So finally, wish you all the best for the upcoming examination and all of your future endeavors. So let me wind up the session for today. Okay then, bye.